If you can't meet customer demand, it doesn't matter how good your product or service is. And this video discusses the problems that are happening at Vail Resorts and the different types of capacity and how it affects your business. So Vail Resorts is an epic problem. I'm amazed how much money and time people put on skiing. So it's really a perfect example of a business to talk about this issue. So it says, here we are at Vail, one of the biggest mountains out there for skiing, right? For the first time ever, it sold fewer lift tickets known as Epic Passes than it did before. Epic Passes, which cost $1,000, they offer you unlimited access to 42 Vail properties around the world. So if you're a skier and you're going to be skiing a lot and you're going to be skiing in a lot of different places, this is a valuable thing to have. And the question is, why have sales gone down? Well, here's the deal. The whole business model rests on the past, and the diminished interest could spell trouble, compounding other issues the company's grappling with. Chief among them, the growth in skiers has been muted for 20 years. Then you throw on top of that, they had a strike with the ski patrol that monitors skiers out there. They're out there for safety purposes. So the problem is that skiing's more crowded. The overall market for people who are skiing is going down, and new skiers are less likely to go because they read articles like this and find out, well, it's super expensive and the mountains are really crowded. So this is an example of not being able to deliver the experience that people want because they're paying a higher and higher price for skiing that's less and less attractive because it's too crowded. Okay, this is my book, Cost Accounting for Dummies, the second edition, and this is where I talk about capacity. The problem at Vail is there's too many skiers on the mountain. That's a capacity issue. So what I say here is capacity refers to how much you can do based on the assets that you have. So Vail has a limited number of mountains, a limited number of ski patrol people, hotel rooms, et cetera, et cetera. Now, there are different levels of capacity, and that's what I want to get to here. This section deals with four kinds of capacity: theoretical and practical capacity. So let's scroll down. Theoretical assumes nothing goes wrong. Nothing in your production ever goes wrong. Accountants describe this as full-time efficiency all the time. That's not practical, which is the next definition. This is pie in the sky, perfect situation. So Vail has a maximum number of skiers skiing the resort every time there's enough snow. So that's not realistic. Instead, practical capacity is the maximum level of capacity that includes unavoidable operational interruptions. So if you're at Vail, you get too little snow or too much snow or an avalanche, some other sort of mishap of the weather. Those are unavoidable. You have to stop skiing. Just like in a production facility, you need to stop producing. So practical capacity is probably more realistic. And then you get down here and you can see that you can make a computation, and it says you figure out production giving a certain amount of unavoidable operational interruptions. So in your business, be realistic is my point. Use practical capacity. How much can you really supply to a customer realistically? Because the problem is if you overpromise, you're going to lose business. So the takeaway here is plan your production for your product or service that you're going to deliver based on a realistic or practical level of activity. If you overpromise, you're going to lose existing clients, it's going to be hard to find new clients, and you're not going to be able to generate repeat business.